Yep. Are we green light?
Okay, we are green light. Good evening, everybody, and thank you for coming to our next session. I will not waste time by talking too much, and I'm just going to hand over to Adam here, who will tell us what we're going to be learning today. And Adam, the stage is yours.
Yeah. Thank you so much. Hello, everyone. So today's topic of teaching is going to be Fibonacci's. So we're mostly going to just have a brief overview. As I've had brief overviews of the previous topics, we're just going to learn like what Fibonacci's are, what are the different types of what do you call it? The help you can get through Fibonacci's by having different types of Fibonacci extensions and retracements, and how you could possibly use them. Now, before I get into Fibonacci, I just like you to know that for me, Fibonacci is more of a secondary confluence. As I've told you before, I trade mostly based on price actions and time, which is just the candles. But yeah, every now and then I do use Fibonacci's as a secondary confluence to enter a trade. My main use for Fibonacci's is analysis purposes. And when I don't want price to go above or below a specific level of a specific candle, so I just use Fibonacci's to mostly mark like the mean of the candle or a mean of a fair value gap, because I'm eyeing the price either to break from it or not. Based on that, I'll just take or my trade or not take my trade. So when it comes to Fibonacci's, so what is Fibonacci? I'm not going to go into like a big history detail. That's something, if you're interested in history, you can just do for yourselves. But Fibonacci is something that a lot of traders they use to enter their trades, and in essence is just a calculation, mathematical calculation based on several formulas from history where they've derived up to specific levels. And I believe it was done by some mathematician, Leonardo Fibonacci, and they made like ratios and sequences. And just to let you know, Fibonacci's they've been introduced into trading, but essentially for Fibonacci's can be used in everything, like literally everything. Your Fibonacci is used in literally everything in daily life. But obviously, we are here using it in trading. So, if I'm not wrong, there's multiple types of fibs that you can use. If we have a look over here, you look at this here, there's fib circles and spirals and wedges and all that kind of thing. Again, that's because they've been derived by mathematician. So you can essentially use them in any way possible. The two fibs that I primarily focus on are two. One is your fib retracement, which is this one that I've just clicked, just for the sake of remembering this symbol. And the other one that I use is trend-based fib extensions, which is this one, the one that I've just clicked, again, for symbol remembrance sake. So both of these two essentially serve the same purpose, but I tend to use them in two separate ways when I'm doing two separate things. And these two are going to be my primary focus for this lecture, because truth be told, I do not know what these fib channels and fib time zones and all of these things are used for. Fib speed resistance arcs. So there are like multiple things based on like mathematics, which stretches way beyond my mental capacity, honestly. I was shit at maths anyways. So moving on, we're going to start with fib retracement. So fib retracement is just a very, very simple tool that tells us how much price is going to retrace from a specific swing point, right? So the ideal way to draw your fib extension to see how much price is going to retrace from a specific structure is you take this fib, put it on your high, structure high, you see how price is dropping down and there's no retrace. The only retrace is over here when it starts. So this is my low point. And I'm just going to do this right here. So structure high, structure low, to see how much price is going to retrace before it starts sending it down. All right. The same way, if I remove this and I want to go long, structure low, structure high. Yep. See how much price is going to retrace, how much you would expect them to retrace, what each specific number means on the fibs. And then, as you can see, price sends it above, right? So for all of those that are interested, these are my fib settings, and these are the numbers that I use. If I use these, and if I, that's pretty much it. Yeah. So these are the ones that I use: 0, 0.5, 0.62, 1, 0.2, and 0.786. I'll talk about these first. So as you can see, very straightforward. I'll just yeah. So you have a 0, you have a 1, your high, your swing low, and in the middle you have specific levels. So what does it denote? A 0.5, which is a 50%, which also shows you the price. That is basically for this specific structure. The 0.5 is where the price is 15333.25 is where you'll have your midpoint, right? Then you have your 0.62 and your 0.786. So there are many things in fibs such as like the golden ratio and all of that, honestly, but I don't use those. I only use these. 0.62 I use because this is something that is considered as an OTE entry, that is your optimal trade entry, which basically states that when price comes to around 0.62%, which means that it's retraced to 62%, there is a very good probability that this is how much it's going to, what do you call it, stretch down before it starts going in the opposite direction. And as you can see exactly how it is going on in this example. And you need to understand something known as premium and discount in order for you to understand fibs. Now, this is something I was going to talk about in the preceding lectures, but obviously it's a bit difficult to understand fibs without premium and discount. So let's say if you're trying to go long in this case, when I draw my fibs from the structure low to the structure high, right? Anything below the 50% is going to be where I'll be looking to press the buy button, which means that I'm going to be in a discounted zone. Anything above the 0.5%, 50% or 0.5 fib is going to be a premium where I will never be looking to press the buy button, right? So the point being that the more you start coming down from the 0.5 fib, the more you're going to be in a more deeper discount. And that's where the level 0.62 and 0.786 comes from. When price retraces to more than 0.5, that is more than 50%, starts going towards that 0.62 level. This 0.62 level is something that is considered as an optimal trade entry. And there's a very high consideration from your behalf that price is not going to drop further, or I don't want price to drop further. And I'm going to press the buy button, right? Now, as I said, this is a secondary confluence for me. Why? Because again, my main focus when I hit the buy or sell button is where's my order block? Where's my fair value gap? With that being said, why would at this specific structure, why would I be looking to press the buy button at 0.62 not at 0.786? We go back to our previous lectures on order blocks and fair value gaps. If I look over here, what is this? Is this not a bullish order block? Down close black candle, tries to close in below the green candle. The next candle that is forming green takes out the upper portion, closes on top of it, makes a bullish order block. If I draw my fibs and I see price coming to 0.62 and I see my order block there, I would not wait for price to go to 0.786 because I know that there's a high chance that it wouldn't. And that's exactly what's happening here. You can also see multiple examples. But just to let you know, I don't use fib retracements to enter a trade or use it as a secondary confluence. We'll come to that in a bit. So the point being made here is that the more you're coming down from 0.5 level, when you come to a 0.62 level, that's your optimal trade entry percentage, 62%. And when you come to 0.786, that's 78.6, that's something we dub as a deep discount, which means that if price reaches here, and if your daily bias is correct, your higher time frame point of interest has been achieved on this lower side and is going to blast off. If you see price anywhere between 0.62 and 0.786, that is the most important place for you to hit the buy button. However, if I have go back to my OHLC, and let's take an example of fib retracement over here. If I'm expecting price to go up and I have my candle, if I have my candle, let's focus on this candle. Yeah, let's focus on this candle. So if you can see this candle, the price is closed below 0.786. Even though by the bare minimum, right? Let's see, 0.786 is at 15135.75. And if I look at the low of this candle, that's 15127.75. So it's closed, obviously it's closed below this, right? I will not look to buy because that's a clear-cut indication that since price is falling into more than a deeper discount that I want it to be, that is below the 786 levels, and the candle is closed. If the candle had wicked, I would have been a buyer. But the fact that the candle closed, I will not look to buy. And look at what the next candle does. Straight through the 1 fib, which means that potentially going in the opposite direction. That doesn't mean you're supposed to press the sell button because price can always retrace like this into fair value gap and then go down while taking your stop loss with it. So you have to take into account these things as well. So these are essentially what do you call it, fib retracements are for, and what fib retracement why I use the fib retracement is mostly for analysis purposes. So as I gave you the example here, if I'm looking for price, we'll focus here. If I'm looking for price to come to this order block, and I want to be really, really sure that I don't have my stop loss hit if I'm having a tight stop loss, what I would do is I would make this and I would remove everything other than the, remove everything other than the 0.5%. Now, what I'm going to do is if my order block is valid, there should be no close of a candle below the 50%, because this would mean that the candle's mean threshold, which I have measured up using the fib retracement, has been violated, and I would not use this as an order block. And then I could potentially use this candle as an order block because I would expect price to come back down to this level. Now I draw the fib retracements again so that the mean threshold isn't violated. And as you can see, if you had chosen this particular order block, you would have been in a more safer position, because look at this candle, it closes and takes the downside of this candle. Then you have a green candle and two consecutive green candles with no black candle in between, takes out the high of your order block candle. My order block is formed. I pick the high of the order block and I'm completely safe. There you go. Much better entry than this. Could have been an entry, it doesn't matter, but still, this was a much better entry. But in cases where I would doubt my order block and my trade placement, my stop loss placement, I would simply just do this. And to be on the safe side, I would set my limit on the 0.5 fib. And in that way, if I do end up taking my trade from, if I do end up taking a long, I would take it from here. And in that case, my stop loss would have been 352 ticks. That's because we're on the daily candle, but it'll still be less, right? As compared to if I come here and I do this, then my stop loss would have been either hit or I would have an even bigger stop loss. So in that way, in that regard, if you use your fib retracements, it'll just save you from that extra heat that you can get in terms of drawdown or a potential stop loss hitting, even though this is a much better order block as compared to this. But if you're someone who trades on a higher time frame, then you need to really, really minimize your stop loss. And for that, your fib retracements are very, very helpful. So this is one of the ways that you can use a fib retracement. And the other way is for long-term analysis. Like say on a daily, if I draw from this structure high to this structure low, and we include our 0.62 and 78, and say we're somewhere on the 29th of August, price is ramping up. Now, these fibs of mine would tell me that, okay, I want either price to close above 0.62, get rejected from 0.62 or keep on going up towards 0.786, where again, I do have my fair value gap, and that's somewhere I'll be really, really interested in. So in this particular scenario, if I was to be a seller, I would wait for price to come to my first and most important confluence, fair value gap, and a potential order block. My secondary added confluence for confirmation, 0.786. So I would tell myself, okay, you will only push your sell button when price reaches the 786 level, where I have my fair value gap. And my 0.62 level would be invalidated because I have no fair value gap, no order block, no structure, no higher time frame point of interest that is going to be met. In this case, this being the higher time frame point of interest, because see, this high has been taken out, price is tapped into the 0.786, into my fair value gap, into my big green order block, right? And then what does it do? Straight dump the next week's straight dump with a slight retracement up, which again, for which you can use your fib retracement. Let me just turn on the magnet. Yeah. So if I draw this structure high, this structure low, and why did I use this structure low? Because after this, we had green candles pushing price up. Now have a look at this. Price starts rejecting the 0.62 levels 4 times. And even though I have a candle up close above the 0.62 levels, I know that my higher time frame point of interest has been achieved. I'm in a sell program. This is just a small retracement before price starts amping down again. And that's why I would ignore the candle close, because I have multiple candles that have closed but still getting rejected 0.62 level. And therefore I'm still going to be at this particular point, I would be a seller at the 0.62 fibs. So the point I'm trying to make is that these are the 3 levels which are important when it comes to fib retracement. The 0.5, just so you don't have a too big of a stop loss placement, so that you can identify within a structure where your discount and your premium is, and then your 0.786, which is your deep discount, and your 0.62, which is your optimal trade entry level to take a trade from potentially in confluence with fair value gaps and order blocks, right? So these are the 2 reasons I use my fib retracements, again, for analysis and for invalidation of an order block or even a fair value gap. Let's see, let's give this example on a fair value gap. I have a daily fair value gap here. Look at this. If I had a candle that wicks through the 0.5, right? I have a candle that wicks through the 0.5 and even wicks through over here to the 0.786. That's fine for me. I would still be a seller, and that'll be even more confluence for me to go market, right? Let me just erase this. But what happens if this candle that is wicked, instead of the wick, it closes above the 762 levels? Then I would never be a seller. Then I would try to see if there's a higher time frame point of interest that is yet to be achieved. What's going on? Sorry. Yeah. So I would still see another point of interest, higher point of interest for me would be this fair value gap. This is also a fair value gap, which is generally considered and dubbed as a volume imbalance for knowledge sake. I would expect price to come here, and then I would draw my fibs inside this for the 50% to not be violated. But since we have a clear-cut example over here, that price indeed did not violate this, and again, it dropped down. And you can come down to honestly any levels, any time frame, and it's the same. It doesn't matter. I'll give an example of the trade that I took that I haven't posted yet, but I did take. I took this short from here, right? And even on something as small as this, if I draw this fib, look at this. Structure high, structure low on a 5-minute. It's 0.62, take the short. Obviously, that's not how I did it, but because again, I told you I don't take my trades based on the fib retracements. That's only for analysis purposes. Let's have an example here. All right. Very good example here. Fair value gap, right? multiple rejections, really tempting to take a, what do you call it, short, but I didn't, because my higher time frame, I know from my knowledge that the higher time frame point of interest has been achieved. And look at this candle. Look at this candle that has wicked, the black candle that has wicked through completely. This shows a willingness to go up, even though there is no candle close. But if you have such a long wick that goes through your fibs, that is your indication to just stay put and wait for a bit. And look what happens at this green candle. Straight up rejection. Violates your fibs and starts going up. If you were short, you would have had your stop loss hit. And yeah, that's it. Hard earned money gone, right? But instead, you could be smart and you could have your higher time frame point of interest achieved from your knowledge that you've had gained, and you would be a buyer. And have a look at this. Perfect. 0.786, deep discount, right? Let me just remove this for a second. Order block, yes. Hopefully you guys know that this is an order block by now. Yeah. Perfect. Multiple time rejections. Once a candle has closed, only once this candle has closed. But again, as I told you previously, when you have so many candles that start rejecting, starts wicking in, I would neglect this candle close, because look at my next candle. I have one last opportunity before I enter. You're right or wrong? I have multiple opportunities to enter here because this is my order block high. But just to minimize my stop loss, right? Just to minimize my, oh, sorry, wrong fib. Just to minimize my stop loss, I will take it from here. And now have a look at it yourself, right? That if I take a long here, and I take this structured low as my stop loss, that'll be 46 ticks, right? Rather than me taking my stop trade here, that'll be 91 ticks. Because the rule is that your stop loss, as I told you from the previous lecture, the rule is that you have to place your stop loss at the low of the order block, right? So if you're smart about it and you draw your fibs, that gives you a 50%. You reduce your drawdown or your heat by 45 ticks. And that's a lot of money, right? We go here. All right. Now have a look. I want to buy with a stop loss of getting, let's say, two micros with a stop loss of 45, right? That'll be me risking $45. It doesn't matter how much I'm trying to earn, because I told you it's what you risk, not what you earn. 45 rather than 91. So now you tell me which one would be better, 45 or 91, right? So this is how you minimize your heat. This is how you manage your trade. And this is essentially what risk management is. And this is one of the tools that you could help use to have good risk management. Because at the end of the day, it's all about risk management, not about how much of this green you pump up. It's about how much of this red you minimize, right? This right here. So this was mostly about fib retracements. The second thing that I use personally to act as a secondary confluence to entering a trade is the trend-based fib extension. Right, we go back on the daily chart. So it is trend-based fib extensions are essentially the same thing. It's literally the same thing. It's just the values are a bit different. And by definition, your trend-based fib extensions, they're mostly used for when you're in a trade, which means where you have to take profit. You can do that out of fib retracement as well, but it's generally preferred on a fib extension. I honestly don't know why, but let's draw a fib extension, right? I'll use the same example because it helps to solidify it more, not because I can't find more. I can find like trillion examples on all of the time frames. But if we come here, we take the same examples. Same concept is the same. Structure, if I want to go short, structure high, structure low, structure high. This is the only difference there is. In a fib retracement, you would just, if you want to do this, is just high to low, and it'll make that thing for you in the same direction. But in terms of a trend-based fib extension, there's just an added step. Structure high, structure low, structure high, right? So these are the levels that I have on my trend-based fib extension strictly, right? These are the levels 0, 1, 0.236, 0.382, 0.5. And then I have my standard deviations. That is 1.618, 2.618, 3.618, 4. This should be 4.618 as well. I don't know why this is like this. But anyhow, let's start from the top. So these levels, 0.236, 382, again, completely dug up by mathematicians, and they've put in these values over here. I have no concern whatsoever as to why these values are here, what the significance is. I just know how this works for me. And I only have 0.236 and 0.382 because these are the two of the most goated levels for taking trades, right? And more so specifically, the 0.236 level. That is the most significant influential levels in the trend-based fib extensions for taking a trade. And it is, you could say that it basically equates to the 0.786 on the fib retracement. If we look here, see, more or less the same. But for trade entry as a secondary confluence, I use trend-based fib extensions. And as you can see, at every given point, if you want to set your limit order, even if at some point you don't have a fair value gap or anything on your time frame, you set it on your 0.236. Or what you could do is, let's say you're putting in 5 micros. So you can put 2 micros on 0.28382 limit order and 3 micros on 0.236. Either get one filled or both filled. But the only problem is that if you put your, again, we have the same problem, right? If you put your, where'd it go? Short, yeah. So you have a short here, and you're targeting this structure low. Essentially, you will have a very bigger stop loss. The rule is the same. Order block low, fib level 0, stop loss placement, right? So you will have a bigger stop loss on 0.382 rather than if you have your stop loss on 0.236. And look at how price perfectly rejects 0.236 and starts dumping down. You can essentially apply the same principle over here. Bring it here. On that final retracement before price dumped this whole week. Look at this. Will I be looking on 0.382? No, because my candles have closed above 0.382. Will I be looking at 0.236? Yes, but this time I would miss my trade, right? Completely natural, completely fine. You'll have multiple more opportunity to do these things again. But to be on the safer side, I usually look at the 0.236 levels because that majority of the instances, it coincides with my fair value gap. It coincides with my order block. Let's see if you want to be a buyer here when I want to go long. Look at price. Perfectly into 0.236. I have my fair value gap, as you can see here. Yeah. And look at that. Perfect. No candle close, nothing. Perfect. You want to be safer. If you have essentially sometimes a very order block with a very small body or with a long wick, I advise drawing your fib retracement from the wick. Look at this. I could have placed my stop or my trade entry where? Let me just remove all of this. Oh, what's this? Yeah. Just to be on the safe side because I have a very small body with a long wick. So I would place it on 14957.00 and look at where my stop loss would have been. Literally negligible. If I put my stop loss on the not over here, not over here, because now I've drawn fibs. And now I'm considering this wick my order block because it has a small body and a long wick. When that's the case, you consider the wick to be your order block, right? And by rule, if I have fibs drawn, my stop loss is going to be on the 0 fib, right? Look at this. Next to nothing on a daily candle on a daily candle, you're having 85 ticks of a stop loss. And what do I target? If I'm someone who does long-term trades, I target this high, right? That's me getting a 2,600 tick move on a 30 risk to reward ratio. Why? Because I know how to use fibs. It's a big gamble, obviously, but still, if you're someone who has no emotion or no fear, it's like perfect, the perfect trade, right? So coming back to my live example, trade that I took, the one that I posted. Let's use our fib extensions, yeah? For long. Look at that. Triple fill on 236. Triple fill. Does any candle close below 236? No. Can I go long? Yes. Why? Because I know how OHLC works. Okay. Now, another added benefit of your fib trend-based fib extension and the primary use of it other than entry is your take profit. Where would I take profit? That's where these standard deviation levels are for. Your fib 1, your fib 1.618, 2.618, and so on, right? In this case, if I catch the bottom, and this is a very good for if you want to split your take profit into 3 take profits, which I ideally would recommend to do. And it's something that I do when I know that I've caught a very big move over here. Actually, let's take this as an example. This is a much better example. If I know that I've caught a very big move because I've caught the trade from the low of the day or high of the day, right? So if we take the high, we take the structure low, we take the structure high. Look at this. Again, my candles have closed above the 0.236 levels, but that's where my fib retracement would come into play because I have a very big order block. There you go. 4-time rejection with only 2 candles closing above. More than enough for me, especially when I know that I've caught a big move because I've essentially on the highest of the high for the day, and I've caught it from the high of the day. Get filled at 236, right? Let's see how we fare in terms of our trade. Trying to go short on 236. How much of a stop loss would I have? 54 essentially, right? So there you go, 54, which is nothing. In contrast to what I want to target, if I just go towards the 15, generally to target, I would prefer going on the 15-minute time frame because that's where those structures are very much respected. So this is what I would target right here. 500 ticks, 9 risk to reward ratio for only, let's calculate actually. It's much better if we calculate. So if I put in say 2 contracts and I go 500 ticks and my stop loss is 56 ticks, what am I risking? $56 to earn $500, which is stupid. Imagine someday you get better and you use, rather than 2 micros, you use 2 minis, which is 20 micros. You're risking $560 to make $5,000. And I'll be honest, I don't want to offend anyone, but there are a lot of people whose monthly wage from their day job isn't even $5,000. So ridiculously stupid. Coming back to the point that trend-based fib extensions are used for taking partials off, that is taking profits. So you take your first off at 1, if you've caught it from the 0.236, the first partial you take off at 1, the second partial you take off at 1.618, and then 0.2618, depending on whether, if this is my final target, right? Where would I take my partials off? And why? If I take my partial off over here, first partial would be at 1. Perfect, right? Follows on it perfectly. The second partial that I would take would be on 1.618. You see here, this is a low, this is a structured low, a very, very valid place to take your partial off. And look how close it is to the 1.618 fib. Perfect. Where would I take my next TP? 2618. However, the one that I've set for myself based on the structure is a bit higher. But why is it that 2.618 is derived by mathematicians? And what significance does it hold? If it didn't hold any significance, price would straight up reject from the level that I want to take my TP from. But does it do that? No. Look at that. Look at how it's spiraling, snaking around, wrapping itself around this 2618 level. So if I'm someone who doesn't trade or take profits from structure to structure, I'm more than happy to take my trades and my profits off on the fib, extended fib levels. And look at how perfectly gyrates around this, around, and then look at how it blasts off again before it starts dropping down again. But the point being, when you see price doing this around a mathematically derived level, you know that it's getting rejected and I should be in a buy program, irrespective of whether you don't have any structure here or you've not met a higher time frame point of interest, which just to know, over here we did meet a point of interest, but that's not something I want to talk about right now. And I took this long. I did take this long, and I literally took it all the way up to this 1 fib. But the point being is that these fibs are very, very powerful tools. Although for me, again, secondary confluence, because for me, the most powerful thing is price and time. But when I use a fib and the 236 levels falls perfectly on a fair value gap, it falls perfectly on an order block, then there's nothing stopping me from taking that trade. Despite the fact that I just closed a short, I immediately opened a long on a market. I didn't even have anything from here. All of this hadn't happened. But if I let it play out, it would have happened, and I would have taken my trade like this. Again, see, structure low, structure high. 236 gets filled 1, 2, 3, 4, 4 times. Now, this right here is a perfect example of why a fib can fail you, but your candles will never fail you. Why? Because I would put my limit over here on my order block. And look at how this is the difference of accuracy between price action / time and a fib. Yes, you do get filled on 236 4 times before price goes off. But you would have had, if you had gotten fill at this candle, you would have had to go through the anxiety of all of this accumulation before price blasts off. Me, I would have had to deal with this fill, come again, I would accept that, and it never comes back. Look at these candles. Look at these. Price candle closes above, market structure shift. I'm content, completely content. Now I know the price is going to move up. Moves up, comes down. Again, order block. This is your order block. Taps into the order block, goes up. This candle closes above this. I'm even more content. Drops down again. Where does it drop down? Order block again, revisited. Boom. Look at this. Stupid. So rather than putting my limit on a fib, I would put my limit on my order block. And I would get filled at a point where it would, at least I'll be mentally safe, if not safe from a trader's perspective. Because during this fill of your first fill, with price going up, coming back down, I know a lot of people personally would have closed this trade because they would have thought, oh, this is coming down on me, and I don't want to take this. So again, that's a personal opinion. I would take my trade on the order block. We're using my fib 236 as a secondary confluence. Why? Because my 236 falls perfectly inside my fair value gap. Perfect. Right? Even below it, that's even more better. That way I can trust my order block even more. But the main point of me using fib extensions, as I told you before, it serves two purposes: take entry, take profit. My first profit would be at fib level 1. Let me actually tell you that I wanted to exit over Here, this was my final TP based on my structures. So where would I take my profits based on fibs, and look at how accurate they are. Fib number 1, 14901. That's my first partial off. 1.618, my first partial off. And look at how perfectly it coincides with the structure high. My last TP, 2.618. Look at that. This is where the accuracy of a fib exceeds the accuracy of a structure. The accuracy of a structure in terms of order blocks and fair value gaps and taking a trade is much more superior, in my opinion, than a fib. But when it comes to taking profit, that's where the structure falls below. Your fib comes first in terms of taking profit, because look at the accuracy. 2.618 touches it, fills, and straight up rejection, straight up dumps, completely down. Does not waste a second. And it falls at such a high pace that you cannot take an entry from this structure to this structure. Nothing, not even 0.5%. Yeah, maybe if you drop on to a 15-second chart or a 30-second chart, you can use the trend-based fib extension to get an entry, but not on a 1-minute chart that I use. And I don't think it gives you an entry anywhere here. Structure high, structure low, try to go short. See, I get filled on 0.38382, but there's nothing to support my idea. I don't have an order block. Yes, I do have a fair value gap, but price never reaches there. Never reaches to the, it does reach to a 5-minute fair value gap, but personally, I wouldn't trust myself in this situation. Even though, look at it. It only goes into the 5-minute fair value gap once, just once. And I just look at it 1, 2, 3, 4, 5, 6 times rejection. That is, if you're someone who's been trading for a while and has a lot of, what do you call it, confidence, you would enter here on a 382. But again, fib, main confluence, main accuracy in terms of taking profits off. Take my first partial off at 1, take my second partial off at 1.618. Look at the accuracy. Look at this. Again, take my second partial off. Look at this. If I take this whole candle, look at this. Does your 0.5 not fall on the same price, 14900.25, on both of them, 2.618? So this is where your actual mathematical accuracy comes into play. And these aren't just, I didn't just randomly draw it. This candle in turn, this specific candle, it has its own significance. It's called a specific candle. I'm not going to get into the details of that, but I just want to show you the accuracy of the fib. Why a 0.618 would have been a perfect place to take your second partial off. Coming back down, this would have been my final TP based on my structure, right? So how many have I taken off? Taken off 1, 2, 3. And I can either let the rest of it run, or I could just show you even more accuracy of the fib extension in terms of taking off partials and take profits. Look at this. Again, mathematical power. Again, look at this. This is for 4.236. If this was 4.618, it would have been, let's actually try to fix this. Oh, 4.234.618. Yeah. Have a look at this. If my target is here, but my fib is showing me my TP at 4.618, personally, I would trust my own structure. But this would be a clear-cut indication, at least for me, that price is going to fall lower than this. Not by much, but still just enough, right? And then it just amps back up. But the point being, the take-home point being that you use 2 out of the many fibs that they give you. One is the fib extension, which shows how much price is retracing. And then you have the trend-based fib extensions. The levels on the trend-based fib extensions are prefixed based on mathematicians. The 236 and 382 are like the most powerful places you can take your entry. more so specifically the 236. And the main function of a trend-based fib extension is taking profits. The levels are prefixed, right? And in that way, it'll show you where to take your profits. You can use it for entry, no doubt. You can use the 0.236 for entries, and then you can use your 1.618, 2.618, 3.618. It'll just shows you projections of a price, potential projections of a price. If price has not rejected from 2618 and dropped down, it would have come down to 3.618, which is almost exactly the same as your structure high. And that's how you can help determine that, oh, okay, price got rejected from 2.618 very strongly. That's an indication that it doesn't want to go up. Straight dumps down. Even over here, something as small as this, price starts rejecting from this fib level, we'd expect it to go up. It amps up, bumps up. Where does it want to go? It wants to go to this structure, break this structure. Doesn't do it in the first try, comes back down, goes back up again, breaks it. So this is the main use of your trend-based fib extension, potentially taking an entry on 0.236, and more so specifically, taking partials off and setting a full TP limit using your extended deviations. And then we come to the trend, then you come to the fib retracements. The main function is what, at least for me, is to see where I am inside a structure. Am I in a discount and I'm in a deep discount? Am I hitting my, or what do you call it, optimal trade entry levels in the form of this one? Sorry. In the form of 6.62 or 62%? Or am I heading into a deeper discount, 0.786? Or am I in a premium? Am I in a deep premium? Or the second thing that I use it for is just for analysis sake on a higher time frame, where I would expect price to come retrace into a specific level, so I can go on down into a deeper time frame, what do you call it, smaller time frame, and I can just be short for the rest of the week, not take any longs if I'm on a deep premium that is 0.62 or 786 on a higher time frame that is a daily time frame, vice versa for if I want to be bullish, and I'll only be taking longs, because then I know in that case I'm in a buy program. The only time price would sell off would be just to retrace. Then I'll again be in a buy program, and this is keep gonna go on. And the same thing goes for what do you call it? A sell program. Anytime you're in a sell program, like this big sell off, anytime the price retraces, this buy program, the small buy program, is just a retrace where you can use your fib retracement. Dumps down like this, dumps down like this, and then the day finished, right? So this is just a brief overview of the fibs and how they're used. And again, to remind you that from my personal preference and what I've seen, fib retracement for higher time frame analysis, and to see whether my mean threshold of a fair value gap or an order block has been violated or not in terms of a trade invalidation, and my trend-based fib extensions for potentially taking a limit order on 0.236 if it coincides with my order block and fair value gap, and then more so specifically for taking off partials in conjunction with the partials that I've set off on particular structure highs or structure lows. So that pretty much concludes our discussion on fibs. Obviously, there's much more to fibs than what I've showed you and what there is to it, because the history behind, I have read the history behind it, and it's way beyond my comprehension because it's pure mathematics. But yeah, multiple kind of fibs that I don't even know how to use. Look at this. I don't even know what this is. It's like the roof of a building. So yeah, fib retracement, fib extensions, two of your most powerful friends, secondary to price action and time. And I guess that sums up our lecture.
Thank you very much, Adam. That was, again, as always, very beneficial and helpful. Shall we go see if we have any questions?
Yeah, any question, guys? Oh, I think we do have a question. I usually see people put the third point of the fib extension on the lower high in your example and not use it for retracement entries, but for continuation to mark take profits. Do you do that or no? So as I told you, I use the extended versions of the fib extensions. That is my 0 to 1 is where my structure is going to be, like my high to low, 0 to 1, and then I'm going to put on top of that 1.618, 2.618, 3.618, and these 0.618s are where I take profits, not any other place. No, I think I already answered your question.
Haha.
Oh,
Yeah,
okay,
that's
perfect.
fine.
Yeah.
Cool.
I would like to add that it's very very important that you make your fibs in the right way. Like you identify your structure high and structure low, where you would expect a retracement and then sell off or buy off. Because if you don't, then you're just gonna get wrecked. Because that's something that I did initially. I didn't have proper knowledge of structures, so I would make my fibs in the wrong way, and it would really, really mess things up. But it's always a high point and a low point on any time frame on any structure, and then you project your extensions if you're using trend based extensions for take profit, or if you want to analyze using your fib retracements. Hello. Yes. Does Stars E want to ask a question or something?
I think let's. Oh wait, she's typing something. I think. All right. So while Stars is typing, just wanted to kind of reiterate something. Obviously, thank you very much, Adam, for your continued, you know, willingness to teach us these things that are usually quite difficult to find online, to be very honest. And lots of paid groups don't even teach, stuff in this much detail. Um, and obviously, I just wanted to say thank you for whoever's here today listening to us. And as long as there's only, even one person willing to listen to us, we are willing to teach. And I, at least from my side of things, I would be more than happy to continue arranging these things regardless of how many people are willing to join. But yeah, we've obviously recorded this and we will upload this on YouTube shortly. So those who came in the middle or who weren't able to come in today will be able to listen. And we will see you next week with the next
I just
session.
want to add that I think we're almost at the end of our basic overviews of things. I think the only things that are left is like a bit more of a brief overview on a premium and discount arrays, and just I think one more thing. And after that, we're just gonna try to dig in deeper and use all of these in conjunctions, where I will just show like examples of how we can use all of these things that I've taught you: open, high, low, close, fibs, fair value gaps, order blocks, premium discount arrays. And then we're going to mix all of this and then see how particular trades are taken based on these things. And that's where the actual fun begins, and that's where things start to get difficult. Because when I started learning these things, I learned all of these things individually, and I was like, "Oh, this is easy. Order block here, fair value gap there, up and down, and easy." But once I started seeing and trying to learn all these things in conjunction, what do you call it, conjunction, then I realized, okay, this isn't easy, and I have to learn this properly. So I would advise everyone to save their brains for what's going to be coming in the next subsequent weeks, because it is going to become a bit more difficult. But then again, that's why I'm here, because at least I know that I've learned the proper things and I execute on the proper things. So you'll be getting the right knowledge and the right kind of knowledge and the right amount and the right quality of knowledge. So just stay tuned for that.
Yeah, and I think when we're kind of dug into the trenches, going into all these details and using all these tools at our disposal together, I would really like it to be an interactive session. And obviously, it would be great if people do join for it, obviously, but no worries, no pressure if not. But having an interactive session, I think, will be the most valuable thing from this that we can achieve and gain. Because if you don't ask questions, if we don't discuss those things, you can listen to anything for as long as you want, but as long as you don't discuss it, teach it, learn it, ask questions, it's just not the same. But yeah, thank you very much, Adam. We will see you next week. Stars, the answer to your question. I usually announce the date for the next session on Monday. It's usually on a Saturday, unless Adam has something to do over the weekend, and then we change the date. But provided he's available over the weekend, we tend to do this on Saturdays at 7 p.m. UK time. So yeah, great. Thank you very much for everybody who's come in today, and any questions at any time, especially for those people who are watching this recording, just tag Adam in the Discord, ask your question. We'd be more than happy to answer those questions for you.
Yeah, I'm even if I'm busy, I always have time for questions.
Yeah, and obviously you don't have to
Well,
answer
I
at the
don't mind.
same time. You can answer later on, so it's fine. Just tag him, and we can get to your question as soon as we can. Thank you very much for everybody for joining, and I hope you all have a nice weekend.